Hotline. I'm Faye D'Souza. Thank you for joining us. Over the next 2 weeks, we'll be answering your questions on personal finance, tax and real estate live on air at 6:30 p.m. every day of the week right here on ET Now. Today we're talking about personal taxation. Joining me in the studio, Mayur Shah, Partner Tax at EY, and Jayesh, Karia, Partner International Tax and Regulatory at BSR and Associates. Gentlemen, thank you so much for joining us. We already have people who've called us with questions, but while I've asked Mayur this question already, Jayesh, I haven't asked you.
Yeah, sure.
What are your big direct tax expectations from the budget? What kind of big cuts are you expecting the Finance Minister to give us this year?
You're asking me or you're asking you?
I'm asking you.
Okay. See, I think there is a lot of expectation as far as the budget is concerned because of the, I would say, negative impact or the adverse impact of the demonetization. And even at a personal level, I think people are expecting that the slab rate has to go up kind of thing. There are concessions in terms of various allowances and the benefit which are available in the Income Tax Act, especially with regard to investments into real estate property, especially with regard to interest that people are paying on borrowing, on the borrowing for the investments into the housing properties, and also some of the allowances in the form of like leave allowances or the HRA allowances, or some of the, I would say, the nuances which are resulting to a double taxation like national pension scheme and all those things. I think those should be, I think, ironed out and streamlined. That's from the personal tax.
Yes.
And even from a corporate tax also, there is an expectations that given that there is a slowdown that is happening in the economy over a period of last 3 months post demonetization, I think looking at the concessions in terms of the tax benefits for some of the investments, some of the, I would say, industries, including like the startups, SMEs, the exemptions are to be provided to give a boost to the economy. So that these are some of the large ticket expectations. And the most important is the, I would say, some of the, I would say, provisions like general tolerance regulations should be, I think, either postponed or kind of trimmed down, or the CFC regulations which is talked about, or the inheritance tax which is talked about. I think that should not be introduced to, I think, give a positive boost to the economy.
All right, so the big expectation for us at least is that the tax slabs, what you're looking at on your screen, will actually be increased and cause a saving for each of us. And the interest deduction on our home loans, which is currently capped at 12 lakh rupees a year, might be increased, some ambitiously and hopefully expected to go up to 5 lakh rupees a year. I'm told Wasim Ahmed is on the phone line from Mysore. Wasim, what's your question?
Yeah, hi, good evening. Madam, my question is regarding HRA allowance of 60,000 rupees. Other than salaried person, can an individual claim, I mean, from other sources, or just without salaried person, other individuals, can we claim?
Okay. All right, Mayur, is HRA available only to salaried people?
So no, HRA is available only to salaried people, but for a self-employed person or the person who is not earning any salary, there is a deduction under 8I GGA which allows a rent to be claimed as a deduction from total taxable profit, total taxable income, and the maximum limit for which deduction can be claimed is up to 60,000 based on certain criteria. So answer is yes.
Okay.
There is a deduction available for non-salaried person as well.
All right, so it's not the same deduction, but there's a deduction available. What you need to do is speak to a tax consultant who will help you understand how you can take advantage of that deduction. Amandeep is on the phone line from Chandigarh. Amandeep, what's your question?
Ma'am, this is Aman from Chandigarh.
Yes.
I have two inquiries regarding saving. One is what is the locking period for PPF? It's 5 years or 15 years? And second one is what are the other options regarding saving apart from ATC?
Okay, so you want other options within ATC, or you want them outside of ATC?
Apart from ATC, if I want to save more than 1.5 lakh, then what are the other options?
Right. Jayesh, obviously ATC, and Amandeep's very right, 1.5 lakh rupees is close to nothing in this day and age. People want to be able to save more than 1.5 lakh rupees. First of all, let's talk about the PPF. There is obviously a long lock-in. It's 15 years on the PPF. Do you recommend the PPF? Jayesh?
Yes, I would still recommend the PPF given despite that there is a lock-in. But I would recommend that the lock-in has to be kind of, I would say, scaled down, and it should be kind of phased out 5-year, 10-year, 15-year kind of thing. And why I would say that I'm recommending PPF, because it's like exempt scheme right now as compared to the NPS scheme, which is exempt tax scheme. So from that point of view, I'm recommending. Yes, the interest rates are going down all the way from earlier 10% to 8.45 or 8.5%, but still I think it is a very good scheme. But from the point of view of the overall quantum, which is being, I think, covered under ATC, ATCC and other sections, that limit of 1,50,000 is very less, and I think that should be increased significantly, maybe at least up to 5 lakhs kind of thing. And some of the, I would say, the payments which are being made for various contributions should be, I would say, kept out of ATC, ATCC kind of thing. Like take an example, purchase of a house, that right now the limit for the principal amount is 1,50,000. That should be, I think, removed out of that bucket, and that should be put outside the bucket, so that there is a benefit which is available to the buyer who are looking at the kind of a first home for himself, and also give a boost to the real estate sector. So I think that is something very important that needs to be done.
Oh, of course, the real estate sector. Yes, Mayur, go ahead.
Yeah, just to add to what my colleague has said, PPF withdrawals are possible. For first 5 years, there are no withdrawals which are possible. But after that, 50% you can keep withdrawing, and after every 3 years, you can keep withdrawing to the extent of 50% of the balance which is available for 3 years period. So it is not that you can't withdraw, but the maximum period for PPF is 15 years. Thereafter, one has to keep applying for extension.
Right.
So the tenure is a maximum period of 15 years and not less than 15 years.
Not less than 50 years.
And even the banks also have been kind of extending to another 5 years kind of. So there is a still window of 5 years.
Mayur, in fact, this question that Avandeep had, which is outside of ATC, if I want to save more than the 1.5 lakh rupees, what can I do? There's a health insurance deduction, but other than that, what else can he do? Mayur?
So, if he is a salaried employed, he can choose to get governed by the National Pension Scheme, whereby contribution made by the employer is exempt from taxation to the, or deduction is available with respect to that to the extent of 10% of salary. And his own contribution to NPS, additional deduction of 50,000 he can claim, apart from 8IC, which is up to 1,50,000. So, these are the two deductions which are available to him in order to avail the benefit.
All right. And of course, remember, if you don't have health insurance, that's something you must get. Irrespective of the added benefit of tax, everybody should have a health insurance policy. Mukund is on the phone line from Bangalore right now. He has a question for us. Mukund, what's your question?
Under 80IB.
Yes.
Hello.
Yes.
That is the income tax exemption is only for the builder or the landowner also.
Under 80IB, Jayesh, do you want to take it?
Yes, the present construct of the scheme of 80IB is only available to the developers, and that too only for the affordable housing. Now that 80IB again has now been replaced by what you call it as the 3580 deduction for an affordable scheme. So that's not available to, I would say, the home buyer, but that's available only to the developer.
All right.
So there is a recommendation which has been made by CREDAI, which is a national body, for giving an exemptions for the affordable housing up to 50 lakhs for the first home buyer, so that that I would say significant benefit is available to the person who is buying this house. So similar exemptions are available in other various countries like US and the European countries, when the first home amount is allowed as a reduction of period
Mukund, in this case,
5-10
is a
years.
landowner, and I'm assuming he's entering some sort of joint development scheme, which is why he's interested. So he owns the land, he's not actually doing the development, but none of these schemes will be available to him. Jayesh?
No, if he is kind of a landowner, and if he is getting into kind of what you call it as a joint development agreement, and he's really doing a kind of along with the developer, and he's also kind of putting in the efforts in terms of the approvals, constructions related things, and he really acts as a kind of a joint development agreement, and it fits into the, I would say, the criteria of the affordable housing, then the benefit would be available. Otherwise, a landowner just receiving the revenue share without doing anything, then the under joint development agreement will not be available.
All right. In fact, we also have another caller. Krishna Rao is on the phone line right now. He has a question for us. He's just picked up the phone and called us. He's calling from the Khammam district. Krishna Rao, what's your question?
Good evening, madam.
Good evening.
Good evening, madam. I am a government employee.
Go ahead, we can hear you.
I am a government employee having 7 lakh per annum salary.
Okay.
My income on interest on bank deposits is 50,000, madam. Hello?
Yes, Krishna, we can hear you. Go ahead, tell us the question.
My interest on bank deposits is
60,000,
50,000,
yes.
and my house rent allowance is 60,000, madam.
Okay.
And speculation, profit on speculation on shares business is per annum 2 lakhs, madam.
Okay.
How much tax can be deducted, madam?
Okay, how much tax are you due to pay? How much can be deducted? Mayur, do you want to take that for him?
Yeah, so as far as salary is concerned, I think the tax will be deducted at source. So far as the salary income is concerned, I don't think you have to pay tax by yourself, because that would have been taken care by way of TDS. As far as interest income is concerned, out of 60,000, 10,000 can be claimed as a deduction under section 8I TTA, and balance 50,000 would have to be paid tax depending upon the slab rate which you are falling in the given situation. Most likely you will fall under 20% bracket. So you have to pay tax on interest and speculation income both put together at of 2,50,000 at the rate of 20%.
All right, we're going to take a very quick break, but in the meantime, for those of our viewers who are watching at home, our phone lines are open. If you have a question for us about your taxation, feel free to get in touch. Quick break, we'll come back and we'll answer more questions. Don't go anywhere. Welcome back. You're watching ET Now, and this is Budget Hotline. On this show, we answer as many questions as we can in the run-up to the budget about various things to do with your personal finance, with your tax, and with real estate. And today we're talking about tax, and I have a question for our guest. And I'll start with Mayur. Mayur, there are two things that that we normally compare, and I'll come to the email question in a little while. But first, I want to clarify this for our viewers. There are a couple of things that we normally compare, which most of our viewers who've called in have also asked us the same question. The NPS, the National Pension System, or the PPF, which both give us the same ATC deduction, although one of them is taxable on maturity. Now, a lot of people assume that the PPF will give you a guaranteed rate of return right through the life of the investment. So if that's 15 years, then 15 years I'll get 8.5%. That's not really true. The PPF has a fluctuating rate of return that will reflect the current interest rate climate, won't it?
Yeah, it would reflect only current year. So, if we look at PPF or PF for that matter, the interest rates are, given for that particular year, and it does not get extended for other period. And every year that has to be notified by the regulators that what should be the rate. Now, I mean, if we look at it from that point of view, yes, interest rate is not fixed, and one can really look at it from that point of view. Except the advantage which PF carries is that at the end of the tenure, the interest which is being earned under these schemes are not subject to tax. So one should try and compare this with the effective tax or effective interest rate as opposed to just comparing a bare rate, because it may give a distorted result from an investment point of view.
So you believe the PPF is a better option because the interest that is earned on the PPF is not taxed? And of course, the fact that if you take a fixed deposit, for example, your return will be taxed. If you take the NPS, then you're taxed when you take the money out at the end of the term. Jayesh, I also want to ask you this in comparison to the ELSS, which is an equity-linked savings scheme. It's a mutual fund.
Right.
Would you recommend the NPS or the ELSS at this point?
See, I would recommend kind of what you call it as the equity-linked savings scheme as compared to NPS, because NPS, again, what we have been discussing is that first of all, it is an exempt tax. So whenever that you receive the money, then it is taxable. Also, it says that only exemption which is available on the withdrawal is only 40%. The 60% balance gets taxed, even though whether you receive the lump sum, whether you receive the kind of in the form of a pension. So everything gets taxed at the end. So even your own contribution also gets taxed. So therefore, that's from that point of view, I would suggest that ELS is better given the, I would say, the current environment.
Also, the lock-in of only 3 years, which is the shortest lock-in within that ATC entire gamut of things that are available to us. Let's take a few questions. Prachit Mohanty has written in from Hyderabad. He says he bought a flat in the year 2006 in Bhubaneswar, which is in his name, where his parents are currently staying. He said earlier he was getting a tax exemption of 1.5 lakh rupees under self-occupied property section, because he was also staying there. Now he's moved to Hyderabad and he's staying in a rented apartment. His parents are staying in the flat in Bhubaneswar. Is there a difference in the tax exemption if he calls it let out property and uses that section? What kind of proof will he have to give and show his employer at the time? Mayur, do you want to take? There is obviously a big difference in the tax treatment of self-owned and property that is rented out.
Yeah, so in case where property is being rented out and there are commercial arrangement being in place, such as lease agreement, etc., and this being registered with various authorities, and if it's a genuine commercial transaction, then one can say that it is a let out property, whereas income or rent which is being collected needs to be offered to tax after claiming the interest as a deduction. However, if it is not being let out and it is just being trying to create a documentation to say that I want to claim it as interest as a deduction and a higher interest I want to claim as a deduction, this transaction can be seen through, given that it has been given to parents who were anyway staying with him. So that may become a tricky issue. So one has to really...
If he's questioned, you mean that will become a tricky issue. But if he's not, there is a possibility there that his parents can pay him rent. He can actually claim HRA on the rental accommodation that he's using in Hyderabad, and also claim the deduction on unlimited interest payment.
That is correct.
Okay, so there is an option there. Just make sure that clarify it once and see if you can actually explain that to the income tax department if it does come up. Kirk Fonseca has written in from Chennai. He tells us he has a PAN card and he's been paying his taxes in India for the last 8 years. He now wishes to work overseas. He wants to know, how will this affect the filing of his returns? Does he still have to file returns every year? Jayesh, depending on the income that he has being generated in the country, he'll have to file returns, won't he?
Yes, it all depends on what you call it as the residential status and the non-residential status. Now, if he has moved out of India for work, obviously, and his stay in India is going to be under the income tax act less than 180 days in that year, then he'll qualify as a non-resident. So any income that he earns out in India or whatever that he receives in India, that will become taxable. Rest of the all income that he receives outside India is not taxable. So because he has got a PAN number, yes, the income tax authorities or revenue authorities have the records. And certainly when he moves out, not that all his savings and everything will be, I would say, parked outside or being invested outside, but there will be certain investments which will still remain in India, which will still, I would say, the yield income in India. There could be some exempt income, there could be some taxable income, and therefore there is an obligation on you to file the tax return. And certainly being an individual, you will have the ability to, I would say, the make investments into the various schemes like ATC, ATCC, where you have exemptions up to or deductions up to 1,50,000 rupees, and then you can also take the benefit of the slab rates up to 2,50,000, 5 lakh, and all that, and then you have to file the tax return in India as per that. So the obligation still continues.
Just to add to what Jayesh has said, if gross total income exceeds 2,50,000, that is basic threshold limit. In such case only you have to file the return. If the moment the total income goes below 2,50,000, there is no obligation to file any return as such.
And that is irrespective of your status of as a resident
from
the tax point of view. Right.
Absolutely.
So even if you might have moved overseas, what you have to keep in mind, Kirk, is that if you have something generating money for you in India, so for example, if there is a fixed deposit that's giving you interest, or if you rented out a flat to someone, that person is paying you rent, and this is an income being generated in India within the territory, then you have to match it to that 2.5 lakh rupees. If you're making more than that, you're just going to have to file your taxes. Rajiv has written in from Chennai. Rajiv says he has a salary of 9 lakh rupees annually and a home loan of 2.5 lakh rupees. Even after claiming deductions under ATC for 1 lakh or 1.5 is what you can claim, he's still paying 70,000 rupees tax. Is there any other way to save tax? I'm assuming that he's also deducting his interest, Mayur, because that's something that he can do, the interest payment on his loan.
Certainly, self-occupied property would definitely eligible for interest deductions up to 2 lakh rupees. He should try and even utilize that as well. And he can make appropriate disclosure to employer so that tax withholding or TDS can get curtailed to that extent, giving the benefit of interest which is being paid by him. Apart from that, he can think of making like we had discussed earlier in this show, that 8ID where medical insurance policy is being taken out, or the NPS contribution being made. So on such items also one can claim extra deductions as well.
Jayesh, do you recommend the health insurance or the NPS, or do you recommend people like our viewers take both?
I would recommend take both.
Okay.
Because see, why I'm saying that when you're looking at NPS, that's purely kind of look at from an investment standpoint of, or protecting your future. Whereas when you look at the insurance or the health insurance, any health insurance product which has got kind of, I would say, yes, a growth orientation as part of that. But that's mainly, I think, to be looked at from the point of view of protecting your health in case of any kind of emergencies. So I would recommend that both and not one versus the other.
All right, we've run out of time, but I want to thank both of our guests for being very kind and giving us their time on a busy weekday to answer our questions. Our phone line remains open right through the next 2 weeks. The idea is to clear any doubts you might have in the run-up to the budget, but purely from my point of view, I do realize that this is also an extremely busy quarter when it comes to saving tax and making investments. So we're going to be here right through the next 2 weeks to help you with all of your finance questions. Thank you for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.